most investors have been craving Beyond Meat. Not everyone has been as ravenous for the plant-based company. The stock price has more than tripled, bringing a fair share amount of bears in. Currently, more than a third of the company's float or shares available for trading are out on loan for investors to use for their shorting purposes. Now, since May 6th, when the stock has been able to be shorted, the amount of shares borrowed has increased every single day. Today, it sits just shy of 4 million shares, worth about $340 million. Now, the heavy demand to short has driven up the cost to do so. Investors are now paying as much as 70% annualized fees. That's higher than most recent IPOs shortly after their debuts. Lyft, of course, is the outlier. Investors were paying 100% fees to short Lyft, although the cost has since been cut in half. Perhaps surprisingly, Uber has actually been on the cheaper side, with investors spending only about 2.5% to short that stock. But with Uber's third update in a row today, maybe more bears will feel comfortable to take a dip in the short seller pool. Guys.
I mean, what's so striking about the rise, Leslie, is the valuation this company is getting.
Yeah.
It's currently trading at 64 times sales. I'm just looking at Tyson Foods right now, you know, which produces real meat. That's trading currently at 0.73 times sales. I mean, this is a company that had recorded sales of $88 million.
Yeah. In 2018.
And he's now trading at what, $5 billion?
$5.3 billion is the market cap currently, Sarah. And it's remarkable. And every time they announce something new, a new partnership, a new funding round for one of their competitors, that stock price just keeps going higher. But as a lot of people have pointed out, the float here is very small. It's only about 16%. Of the entirety of the market cap is currently being traded. So if there is some sort of bad news or some sort of day that, you know, there isn't a positive catalyst for the stock to go higher, people could potentially start taking money off the table.
Well, that's an important point I think you make, Leslie. When is the lockup? I mean, are we 180 days or now fewer than 180 days out from when I would assume there's going to be potentially some stock for sale and the ability to take that float to a higher level?
Yeah. We're 180 days minus 14, David. So that is certainly a big catalyst as well for any of these IPOs, because that is the first day when all of these investors, who no doubt have gotten in at a much lower price point than where it's trading now, will be able to cash out if they choose to do so.